Hey guys, Sage here, and in today's video I'm going to teach you how to let your winners run. So remember, we are completely obsessed with the risk-reward principle. If we have that down pat, then everything else seems to fall in place, especially when we're looking at those price targets and letting those winners roll. So I hope you guys enjoyed today's video. Hopefully you learn a thing or two, and we'll see you on the other side. And let's begin here. Everyone, welcome to the webinar. Welcome to the presentation. Quick little introduction. My name is Sage. I've been trading for over 10 years. I do trade with a larger account. Today, you're going to see a pretty big day for me. I had a really, really good day. Some of you guys, I just want to make sure we're setting expectations. My big day doesn't need to be it's going to be different. We're at different levels right now. My big day probably is someone's small day, depending on how big of a trader you are. So we're going to see some numbers. We're going to see some stuff on the Discord group that I want to show you guys, because what we want to do, man, is we want to create a family atmosphere here. We don't want to like throw stuff at you that you will be intimidated for in trading. Trading is not supposed to be intimidating. It's intimidating when you're on a losing streak. That sucks, right? No one wants to be in that. But us as a community, we're not here to intimidate you with some of the stuff that we're going to go over today. So I don't want you guys to think, holy crap, Sage is trading at this magnitude and I'm never going to get there. So just because I'm at level maybe 49 and you guys are at level 1, 2, or 3 for some of the novice traders, don't think that this is not something that you can aspire to, okay? So I really, really don't want you guys to be intimidated with some of the stuff that I'm going to show you. All right, so that being said, been trading for a little bit. I am more of a long-term trader, but as of late, with some of the stuff that I will show you in this presentation alone, I've been liking to scalp quite a bit. And I've been having some success with it the last 4 to 6 months, I would say. So I'm getting more of that scalper's high, and I'm really starting to dig some of the stuff that we've been using here at High Strike. All right, so I changed up the slides for this presentation. If you have seen other webinars before, we've condensed the slides version so I can focus a little bit more on the charts. So after we get through just some housekeeping things, then I'll give you what you guys came here to see. Okay, so the agenda for today is going to be understanding market scalping. So scalping is going to be on the shorter time frame. Okay, I'm pretty sure all of us know that, but scalping is very different than intraday trading. Scalping usually lasts anywhere between like 5 to 10 minutes. Very, very short-term trades. We're going to talk about the art of scalping. So scalping is definitively an art. We do use mathematical computations in order for us to decide positions, but scalping is definitely an art. It's something that some people sometimes have a little bit more inherent. A lot of people out there, they seem to have just like an innate ability to take a position, and then from there they just ride with it, right? That's like 1% of the traders out there. So we'll talk a little bit about innate ability, and then we'll talk about you making this into a skill set, which is what I'm going through right now. Even though you might not be born with that innate ability, you can ramp up the skill set if you just practice. We'll talk about refining strategies. I'm all about refining strategies, and as of late, I've been doing this quite well. We'll be talking about implementing a trade strategies in and of themselves. We will talk about entries, risk, and then we'll talk about putting everything all together, okay? These are very basic things. Entry criteria. So there's a couple of things that I look for on entry. Today was a really good example. So it's going to be a treat for you guys. I set an entry criteria for my watch list today, and it doesn't happen often, but it hit perfectly. So we're going to talk about entry criterias because a lot of us have what's called, trigger finger for trading, and we just want to be in a trade. And then sometimes when we're in that trade, I don't know about you guys, but in the beginning, I used to feel like I wasn't in control. I wasn't driving the bus. If you have that feeling, this webinar is for you. This information is for you. So we will talk about entry criteria. We'll talk about the validity of either being in a very quick trade, and then we'll talk about knocking that off just a couple steps. Because if you're like, let's say, for example, you're a 0DT trader, you know how quickly these trades can move, right? So I'm going to show you in this presentation how you can knock a little bit of that off so you're not stopped out so quickly. It has to deal with expiration. We'll talk about successful scalping strategies, and then I'm going to teach you in this presentation how to think in terms of risk reward. We'll talk about profit, risks, and management. So this is going to be moving up stop losses, setting stop losses accordingly. So it's very easy to manage winning trades, right? It's very easy to put on $100 and then take it off for $1,000. That's great, right? That's easy, right? You don't have to really learn anything. What you do have to learn is how to deal with your losers. That's what makes you a great trader. Anyone can put on calls during a bull market or during, the last 2 weeks in the market, which I have done. I put on a lot of long positions, but it's very easy to put on trades in the market to go up when it's on easy mode. We're going to talk a little bit about that level two, level three, level four, and so on here. And then we'll talk about scalping indicators and the tools that I like to use. All right. Next, market mentality. What the heck does this even mean? I'm sure a lot of you have always heard you need to get your head in the game. You need to be in that flow state. You need to make sure that your head is nice and clear so you're able to perform at the desktop or at the computer, right? And I don't think that there's anything truer than that. If you're coming to the board or if you're coming to the trade station and you do not feel not just physically fit, I'm not saying that you have to be, Usain Bolt here. You don't have to be as fit as an Olympian athlete, but your mind needs to be sharp. If you have way too much clutter going on, maybe in your personal life for the time being, or maybe you have an unbelievable burden, financial burden, it's going to reflect when you're trading on the laptop. I did an alpha session. I think he's on for today's call. I did an alpha session 1 or 2 days ago where I was talking to one of our alpha members about this. And I was just cautioning the dude. And I was just saying, look, if your head is not clear, you're not going to make good decisions. Now, why is that important to bring up during a trading webinar like I am right now? If your head is not clear, you can literally destroy your financial life just by clicking a couple buttons on the computer. Now, how true is that, right? It doesn't matter if you're at $1,000. The more money you have, the more susceptible you are to that impalement as just a trader in general, right? We do get some traders that come to us and say, hey, look, I had $100,000 and I went long on Tesla for earnings and now I'm down 75 grand, right? I mean, those traders are all over there on Instagram for sure. They're usually the guys that are in the DMs that are looking for the quick fix. And it's very difficult to fix a broken mentality. It really, really is. So if anyone tells you anything different, that you can have a broken mindset and you can be a successful trader, I'm telling you right now, that person is dead wrong. You have to have a winner's mentality. You have to win internally and in your mind before it starts becoming something that you manifest. And I believe that. And I think successful traders have that mindset as well. Successful traders are not the ones that are not taking losses. We just know what to do with our losses when we inevitably incur them, right? Just like military mindset. In the military, they're very, very keen on if something goes wrong, this is the game plan. And that's what we'll be talking about today. This is probably one of the most crucial aspects that exist in trading. Because if you're here for this webinar, I can guarantee you that you've been through a losing streak. And those are not hard, excuse me, they're not easy to come out of, especially if you don't have the coaching, you don't have the right people around you, you're not in a conducive environment. We can all relate to that, myself included. I've lost a lot more money than I would openly admit for the first 3, 4 years of my career. I've lost basically a fortune when I first started trading. So that is so important. Now, what are you doing when you're looking to take a trade? You have to prepare. It's all about prep. If you are taking a trade and you don't know what the hell you're doing when you have the position on, if you're that kind of person that like today I took long positions on Qs, right? It started to get really exciting because it started to move in our direction. So some people, you feel your heart palpitating, you're starting to get sweaty palms because you don't know what to do with that position. That's what we're going to talk about today. So before you do something, especially with trading, in the beginning, it's a little bit more difficult, but the more trades you get on, the more you get a good handle on it. Act like you've been here before. How many times have you heard that in a motivational presentation? Act like you've been there before. If you're winning on the position, just know how to manage it, know how to handle it. Good is going to come with the bad, so on and so forth. If you are professional at managing your risk as a trader, you don't really have to focus so much on winning those home run trades every single time. Today was a home run trading example, but it's not always going to be the case. If you know what to look for, this is crucial, guys. If you know what to look for, you can get rid of all the trading noise that exists out there in the ethos, right? There is so much trading noise out there. So you want to simplify your overall system, which you will see today how pretty simple our system is. It really is pretty simple. And how it is that I prepare for the market. So I got a call this morning, and this is something that happened today. I got a call this morning, and Nick said, hey, I'm not feeling too good. And I was all over it. I literally said in our admin chat, I said, Nick, don't worry about it. I'm ready. I'm ready because I'm prepared. I've been doing this for years and I have the mentality. I'm feeling good about this. I got my conditions. I went through my steps here. I went through my criteria. I was prepared. Okay. Even though it's not my responsibility for that time frame for me to go on, you want always want to be prepared. If you're the type of person that's coming to the market and you're saying, let's see what happens today, that is, it's optimistic, but it's also a little bit superficial. You have to know what your support and resistance levels are, right? So that's this point right here. You need to understand where your indicators are their strongest. Where are you going to get a buy signal? Where are you going to get a sell signal? So on and so forth. You need to know that. It's not something superficial. You need to know what those are. And then the third thing is, of course, you're going to plan out your trades. I am a three trade trader. If I take more than three trades and I lose on all three of them in the row, I'm going to try to cut myself here from bleeding, right? It's kind of like if you take three punches in the chest. Would you continue to do that if you're still hurting yourself? Probably not. Maybe that's not the best example. But if you're hurting yourself with three trades that you lost in a row, I don't know why someone would force themselves to try to make it back as quickly as possible on the ensuing fourth, fifth, sixth, seventh, eighth trade. That is just me. I'm partial to that. If I can't make it work in the first three trades, I'm going to cut the day off. Now there's days where I win three trades in a row. It definitely happens. Today wasn't one of those days. I won two out of my three trading days, but today was a pretty massive day, especially for my corner. Sellers did phenomenal today. Buyers as well, but sellers, my God, today was just one hell of a day for us. Okay. When you start getting good at recognizing the opportunities, you're going to start refining your strategy. So refining your strategy, I can sit here for the next 18 hours and I can talk about how it is that I've refined my strategy, but it's something that you guys need to actually go through yourselves. So joining, like let's say if you're joining a Discord group like ours, maybe you're going to shorten the learning curve quite a bit, but it's the same thing as if you're learning to play a sport. You can watch that soccer game, that football game for as long as you like, but you actually need to get into the field. You actually need to do some exercises in order for you to get the ability for you to perform correctly. Trading is no different. So refining the strategy is just another little point that I wanted to include in my slides. When you implement a clear trading plan, that starts to become, I would say, more muscle memory. So remember what I just said a couple slides ago. When you start to learn how to cut through the noise and just identify the opportunities, then you know you're starting to become like Neo in the Matrix, right? When you're seeing all that code flying around, you know exactly what it is that you need to look for. And instead of trying to catch every little falling or every little jump in the market. So refining your strategy in that sense is going to be crucial. All right, the art of scalping. So scalping is an art. There's nothing really mathematical. There's not really an indicator out there that's going to say, hey, this is a 99% no holds bar guaranteed indicator that's going to beat out the market, 999 times out of 1,000. It doesn't work that way. We are still competing with algorithms, and even more so, we're competing with AI in the market because companies are spending millions, if not tens of millions of dollars on implementing these bots, implementing these trading strategies that are going to beat you out in terms of speed, right? So you will not be trading faster than some of these computational algorithms. It's not going to happen. So what you need to identify is where is going to be your largest risk reward ratio. You can still do that. A bot can't do that. A bot is going to take as much input as humanly possible, but we still have that capability in order to make a human judgment on whether or not we do want to take the position. So we're not there quite yet on AI. We might be there in the next 10 years, who knows, but at least we have that on our side. We're always going to talk about improving our strategies. Even myself, I'm still going through this. Don't think that, I'm going to sit through this for half an hour and I'm going to learn the secret sauce. There's no secret sauce to learn. You're on in continual development process where you're trying to improve. At least myself, I look at myself trying to improve 1% every single day. Today's case, I made more than 1% on my account. So I was happy about that. But I also take into account, when I'm not doing so good, I need to take the highs and lows as they come. And then we'll talk about real-time trades and also technical analysis. I am a big advocate for technical analysis. I do think that it actually works, but for me, it's going to tell only part of the story. Technical analysis, if you're looking at the chart, and if you ever said to yourself, damn it, man, I knew that all the conditions were being met. I just hit 18 different checkboxes for my indicators, and all of them were green to go, and I still crapped out on the trade. It's because technical analysis is not infallible, right? So infallible is going to mean that there's no error in it whatsoever. That's not the case. What you have to do is you have to be a professional probabilistic trader. You need to see where the probabilities are going to favor you. And then from there, you're going to jump on the risk. Okay. I hate when people, especially like on Instagram, when people say my strategy works 95% of the time. It's complete crap. It doesn't exist. You don't need a very high win rate. What you need is relatively very strong risk management, and you can have a 55% win rate. We've proven that. I can't tell you how many times. And if anyone wants to ask me later on during the presentation, I can prove that to you guys very easily. Okay, so these are just a couple questions that you need to ask yourself. Um, these are just some things that I'm asking myself even before I take the trade. And we'll jump onto the charts here in just a second. So are we at a support and resistance level? Now, I think that the biggest thing that you need to put into context is your support and resistance level is different than my support and resistance level. So how the hell do you know which one is the correct one? I have an indicator for that. So I just said that indicators are not the end all be all, but this indicator is pretty good. Some of you already are thinking ahead and you already know what I'm talking about. So that's great. But I'm going to show you here how they work. What is the larger context of the market? What the heck does that even mean? The larger context is, are we in an uptrend on the larger time frames? Are we in a downtrend? So on and so forth. If you're not aware of things like that, you're going to feel lost on the shorter time frames. I will tell you from my personal experience, if you want to learn how to trade and you want to be a ninja, you're going to start out with scalping. It's harder. Scalping is the most difficult thing on planet Earth to do. If you want to go a little bit on the easier mode, you're going to look at your 2 4 hour time frame. You're going to try to do the long-term trading strategy or intraday trading strategy. Or if you really want to put it on easy mode, you're going to do what I do. I'm an option seller by trade. It's literally what I've been doing for the last 10, 11 years. But that's not the point of today. But just to give you the hierarchy, if you want to get really, really good at trading, start out with the hard stuff. But with the hard stuff, you have very, very small margin for error. Just keep that in mind. What is the exit strategy? This is probably top thing that you need to consider. If you're jumping off a cliff, just for example, what's the first thing that you're going to think about? I would imagine that you're going to say, hold on, let me check if, I have my parachute here so I don't plummet to my death. It's the same thing. It's the same magnitude, right? A lot of people when they're getting into this, I don't want to name names here. I don't really want to point at anyone, but it happens. There's people that get a lot of money through inheritance, what so have you, and then they put on a large position in the market and they don't have an exit strategy. So they end up hurting themselves financially and physically as well. This is sometimes life or death, people. How many times have we heard people commit suicide because they weren't responsible with their finances and then all of a sudden they can't pay for XYZ, they can't support their lifestyle, and they prefer to end. I'm being a little bit overly dramatic, but it is at that magnitude. So if you don't know what your exit strategy is when you go into the trade, you shouldn't be trading, in my opinion. Next is going to be the size of your risk. I like to put on 1 to 2% risk per trade. That's just me. If you want to go a little bit heavier, you just better make sure that you have your exit strategy. You can put on a $50,000 trade. That's perfectly. We have guys in our trading Discord that do that. Some of you guys know who Wolfie is. I don't know if Wolfie's on the call. Wolfie would put on $150,000 trades. And I used to tell him, I used to say, that stop loss better be extremely tight. I used to hound him on it. And he would always say, nope, I know exactly where my stop loss is. I'm looking to incur about a 5% loss on each one of my trades. If it gets triggered, then I'm out. There's no questions asked. No problem. That's how you want to think about it. So he knew his exit strategy. Wolfie is a large trader. He's a multi-million-dollar trader. So he knows the business. He can hurt himself real quick, but he knows what he's doing. He knows what he's doing because that exit strategy is there. Next, is the setup actually there, or are you trading on an opinion? Now, this is very dangerous. If you're an opinion trader, if you go into the market and you say, I think that NVIDIA is going to be trading at $950 just because I have that opinion, That's no good. It's not good enough. Your opinion doesn't mean a damn thing in the market. My opinion doesn't mean a damn thing in the market. The only thing that matters in the market is going to be your volume, what your indicators are telling you, and what the candles are saying. That is real actionable information. So if you are a biased trader, and I am biased long term, I have a bias to the upside, but you can be very, very sure that I'm doing my due diligence, that I'm getting my indications for me to take those long signals. So don't be a biased trader. What you want to do is you want to be a conditional trader. You want to make sure that if you're reaching a short or a long condition, if those are met, that's the direction you're taking. When I jump in on the charts, I'm looking at the market and I'm saying, well, I have a long biased opinion on something before the short time frame. Let's see what the market is telling me. I'm the interpreter in that sense. Next, can I afford to lose on this trade? Many of you cannot afford to lose more than $100 on a position. If that is you, you shouldn't be putting on $100 positions and wait, and having a drawdown of like 50, 60, 70%. If you're the person that can't afford to lose a single dollar, you need to size the hell down. Now, if you can afford a little bit more of a loss, then that's great. Then trading might be something for you. You need to be very comfortable with being in losses. Now, they don't have to be large losses. You have to be comfortable with losing often, but losing at small incremental levels. Don't be that. I hate when people say this. You need to pay your dues in the market in order for you to get better. What does that mean? What does that mean? I paid more than 250, $300,000 in dues for my first 4 years, and I can tell you, I didn't learn a damn thing from that. What I learned is all the stuff that I shouldn't do, but if I employed this mentality first, if I can afford to lose that money, which I at the time I couldn't, then I think I would have been a little bit better off. So when you're putting on a trade, always be mindful, can you lose this money? And if I can, how much is it that I'm actually willing to risk? If it's only $10, then make sure your stop loss is set accordingly. Does this fit my long-term goals? If your long-term goal is I want to make as much money as humanly possible, that's like me asking you, um, you want to open a business? Yes, I want to open a business, Sage. All right, what kind of business do you want to open? Well, I just don't know. I just want to open a business and make as much money as possible. Go to a venture capitalist and give them that idea. You're going to be laughed out of that office, right? So if you have a game plan, you want to make it specific. I want to have XYZ increment, and you better make sure that you're writing that game plan down. Just having it in your mind's eye, if you didn't do the prep work to get up to that point, is not enough. You need to have things that are concrete and written down, and you have to have something like a KPI where you can measure some of your performance during the meantime. So you know where you're being efficient and where you're not being efficient. So does it fit your long-term goals? If you come at me and you say my long-term goal is to be like you, Sage, I want to have a $10 million account, I'm going to ask you so many little questions on how it is that you're going to get to that actual position. If your answer is not 4 hours long, then I know that you need to redo it and you need to rethink your strategy. Next is going to be what is the quality of your setup, right? This is going to be so important here for scalping because there is a difference. I call them A, B, and C tiers. I try not to even mess with C tier trades anymore. I try to mess with B plus and then A minus A and then A plus trades. Why would you look at anything else? Why would you even waste your time, right? Remember when we talked about all that noise stuff? If it's a C or a D minus trade, why bother? Why would you even bother? So we're going to talk about some of those A plus setups, A's and then A minuses. Some of you are even thinking to yourself, man, forget the B stuff. Give me the A stuff. All right, let's jump into that. We have two more slides and then we'll jump in on the charts. Some things that I want you guys to be aware of. There's always going to be challenges for scalping. You just want to make sure that if you are actually looking to be a professional risk taker, you have some kind of accountability. So your challenge is if I ask you, and traders ask each other all the time this, what are your KPIs? What are your metrics? If you don't know what that is, then you don't have a firm grasp on how you're spending your time. Our time is the most valuable thing that exists in the market, right? The whole market is based on time. I don't know if anyone ever realized that, but everything we do is just time boxed. And what is this going to do for a certain period of time? So it's very important. We're going to talk a little bit about some of the challenges as well. I'm going to interloop that as we're talking about trades themselves. So we want to learn how we let trades run, but sometimes we're in trades, guys, and they don't seem to move. So we'll talk about some of those challenges here. We'll talk about proactive risk management and also regular profits for our strategy here today. I'll touch a little bit on that. I don't have all the time in the world to really get in the weeds for this bullet point. And then we'll talk about trade adjustment. Trade adjustment is a really, really finite tool that you can use that I do myself. I do a lot of trade adjusting for my long-term trades, but when I'm scalping, I do a lot of this as well. I try to fine tune where my stop losses are. Sometimes I get this wrong, sometimes I get it right, but you want to give it at least a little bit of breathing room. You don't want to keep it too uptight, right? Because all you need is just a little candle move to the downside or to the upside. You're stopped out and you're running through your three trades for the day. You're running through them pretty quickly. So don't be that person that's a tight ass and you can't lose not even a single percent on your trade. You don't want to be that person either. You want to have a normal nominal trade loss percentage. For me, it's anywhere between 10 to 15%. For some of you, if you're going over 20%, you might be overdoing it, right? You might be starting to stack some losses there at that point. Now, if you're that person 30, 40, 50, 60%, you're holding that drawdown, you need to stop it right now for the love of God. Stop doing that. Okay, we have one more slide, then we'll jump in. All right, everyone good? I'm going to jump into some of the charts here, and then we're going to talk about what it is that I look for. It's realistically three things. Okay, so three things now that I've pinpointed down, and then I have a fourth one that's sort of off there to the side. When I hit those four contingency points, then I'm saying, okay, I want to take the short or I want to take the long. So as I'm going into this, don't think I have the bias long, I have the bias short. Don't think about it like that. Think about what is the information telling me on what the direction needs to be, okay? So of course, we're going to have a little bit of bias there, but the more we let it off to the side, I think the better we can be as just scalpers in general. So let's talk about these 3 to 4 conditions. I really simplified this overall process because I want you guys to walk away from this webinar with something actionable, something to think about, a little seed in your head that you can say, okay, now I have a game plan and I'm starting not to pay attention to all this other stuff, stock twits, whatever, and video hitting 1200, whatever. Try to get rid of some of that noise and just try to interpret the actual charts. All right. So let's go here. And we're going to just look at 3 stocks. We don't need to look at more today. We're going to look at the 3 stocks that I put on my watch list. Okay. You know what? Before we continue, I will show you my watch list now. This is literally what I put on, and this is what it looks like when you join our Discord, what a watch list from me is going to look like. CPI and PPI hit for our positions. Cool. So I'm excited. I'm very excited because I made good money with CPI being a good report. So I included this here. SPY all-time high levels just hit. Watch 524.75, which is the snow line. This is the first indicator that I'm going to share with you guys. Excuse me, watch the snow line here for a slight pullback. So the first thing that I said is watch the pullback when the market opens. You guys are going to see why it is that I said that. Qs had a huge jump as well. I said, look, the target for the Qs is going to be 447.20. If we pull back into that area, we might have an opportunity for a quick scalp short. But I was on audio for the first 30 minutes saying how much I didn't like the short position. I was actually looking for longs, okay? So just remember some of these levels. IWM, same thing. DIA, NVIDIA, AMD, you guys get the big picture here, okay? This is what it's going to look like. Now, if this is not detailed enough information for you, then I'm going to be on audio. I'm not going to speak as slowly as I am now. I'm usually pretty quick with my positions, right? Because we want to be as quick as humanly possible because we're combating with all these algos and all these robots and all this crap that right now we're trading against. But what I'm going to do is I'm going to open up my chart and I'm going to specifically focus on 2 or 3 tickers. So more than often, what you're going to see is me focusing on 2 or 3 tickers. I have 8 usually that are put up here because I'm watching volatility or I'm watching some other things that might be of interest. Today, you have across the board here the indexes, which it's usually what it is. You have NVIDIA, which right now is trading above 950. If you're in the Discord group, you're very happy about that. We have a lot of money on that trade. Going great. AMD, I was watching that as well because I thought that the semiconductors were going to have a nice push, then Tesla and Apple. Cool. Now, what is the first indicator that I want to watch? The first indicator is not an indicator that you guys can get for free. It's called a voodoo line. Voodoo line, all it is, don't get lost in the terminology, don't get lost in the context. It's support and resistance levels. So for 6, 7, maybe 8 years, when I first started trading, especially when I first started trading, I was all about putting as many indicators as you possibly can put on your chart. Some people still say that my charts are pretty busy. That's okay. I'll accept that criticism. So what I'm going to do is I'm just going to put up a chart. And from there, I'm just going to see what the support and resistance levels are. So do we remember what the support level there was on Qs? This is the cool thing, right? So I'm talking already about support and resistance levels. So we're already giving this some context. So when I'm looking at voodoo lines, never mind my alerts. These are all my alerts for today. So never mind. Let me get rid of this here. Just permit me 10 seconds here, guys. So never mind my alert levels here. I'm just going to look at something called the voodoo line levels. Now you have access to this via the morning session and also the power hour session. You listen to my commentary on what it is that I'm thinking in the market, and this is what they're going to look like. So the voodoo lines are literally a either support or resistance level. That's a very important distinction. So the either is the part that interests me. So you're going to have something called a fire line. The fire line, you can think about it like a magnet level, right? And we'll refer to some of the math and the algorithms later on. We can get a little bit more geeky, but I want you to focus on just the overall higher level picture. So if you're looking at something called the fire line is going to have the highest amount of magnetism to it. So you have the fire line, then below that you have the tree line, which is green. You guys will see that here in a second. Then you have the snow line, and then below you have something called a skyline. So what this is going to tell me, the information it's conveying to me, it's just saying, hey, Sage, these are levels that we can potentially have an entry for a long or a short. It's either or, okay? Just because we hit a fire line does not mean that we're going to explode to the upside. In this situation, we did. That's not how you have to think about this. In this situation, it's really going to depend on the second criteria here. The second criteria is going to be just pure price action. So price action is going to be how strong the candle, the buyer's wick or the seller's wick is as we're starting to trade into these zones. So if you guys remember, let me go back here to my, let me go back here. Let me go back here to the Discord. The Q's target that I had for today, this morning was 447.20. So check this out. 447.20. These are the regular voodoo lines. Let me put on the micro voodoo lines because those are the ones that I'm using. Just give me a second. Okay, cool. So when I was on, I said 447, 447.25. So let me go here to the 1 minute time frame. They actually changed. All right, so this is interesting. So this changed on me. The voodoo lines looked like they updated, but I took an entry today when where we had the snow line. So the snow line is going to be this white line right here. So these are going to be updated every month. It looks like they updated them for before I did this presentation. But for my morning support and resistance levels, we had a voodoo line right here at 447.20, right? And I actually signaled this right around this level. So what I was saying when we were taking the Qs trade is I said, wait for a slight pullback. And then when we start pulling back into this area, then we're going to look off for a potential long, a potential long. Now, why did I do that? When we're talking about these magnetized levels, what you're trying to do is if you don't have these support and resistance levels, which is just an indicator that we have come to know and to trust, when we don't have them on the chart, I'm very sure that all of us do this. We're looking to just eyeball the support and resistance levels. And this is what I was doing for like realistically 8 years of me trading before I found some of the stuff that I'm showing you guys today. So I would just eyeball these levels. I would literally look and I would try to pinpoint exactly where they were on the chart. How many of us do this? So I'm going to create at support and resistance levels where I see we have a pivot of direction. So we can do this all over the chart here on Qs. SPY is going to be the same thing. You're going to look at some of these pivot levels and you're going to say, okay, there's a support around here. There's a resistance level here, there, that, this, and the other. Okay. So what the voodoo lines are realistically going to do, I don't want you to think that they're like magical levels that you set on your chart. And then all of a sudden it's doing all of this computational math for you and it's giving you the directional bias. It's not there to do that. You have to still be the engineer. You still have to be the pilot and you have to decide whether it is worth the risk for you to take or not. Okay. So these voodoo lines have updated on me, but that's okay. The point is still going to come across. When I'm jumping in on the Qs, I don't have to do so much of the work as I used to do when I'm doing this without the voodoo lines. So these are all levels that I've drawn for myself. I steal a lot of the voodoo lines from TV and I put them here on TrendSpider. So when I'm looking at these levels overall, I'm trying to set these levels and I try to eyeball it. And this is just me practicing for myself. I'm stealing all the information that I have here Sorry, that's busy. I'm stealing all the information that we have here, and then I'm plotting them here to try to get good at finding these support and resistance levels. So this drives the point across pretty well. When I was looking to take either a long or a short position today, I was just looking for us to trade into these areas. So that's criteria number one. If we hit the criteria of either hitting a tree line, a snow line, or a fire line, all I'm going to do, literally all I'm going to do, is now I'm going to watch one of my oscillating indicators. If you don't know what an oscillator is, it's going to be your RSI, your MACD, your TTM. I mean, there's a slew of them. The one that I like the most is called the RAF. Basically, it's the same representation as the TTM squeeze. It just gives you information in a different pattern. That's all it is. So when I'm jumping in on the cues, what was I noticing? This is going to be very similar to how you guys use the VWAP. The VWAP can be your fifth criteria here. I'm only going to talk about the four ones that I use. So we're looking at the voodoo lines, and now we're looking at the RAF indicator, right? So I'm going to show you how the RAF indicator gave me the go, no go here to take the position. So when I jumped in on cues today, when I was on live, I saw the pullback into this area, right? So this was a snow line. When I saw the snow line on the 1 minute time frame, guess what? I went into my oscillator and I got a buy signal. Does everyone see that? So that buy signal to me, I didn't have a bias going into this trade. I just had levels just to watch overall. Now here I decided now I want to infer my bias on the market. Why? Because the oscillator here is giving me a signal to take a long position here. If we broke below the snow line, I'm going to look at another support. I'm going to look at another resistance, so on and so forth. Now, this wouldn't have been my first guess if I took the voodoo lines off my chart. This is just an alert that I put on here. But if I remove that alert and then I remove the voodoo lines, then I really don't have a basis of where I can find support and resistance. So this is one of the first things that I look for. It's going to be thing number one. And this is what we're doing for our morning sessions and now for the power hour sessions as well. We're doing this a lot for our long-term sessions too, or long-term trades, I should say. So I'm looking at these levels, and now I'm starting to become a little bit more partial to a direction. So when you're looking to, impose your bias on something, the two criterias and the two main ones are going to be the support and resistance levels, which we already use because we eyeball them. And then it's going to be where we are on our oscillator. A lot of you are using something called a TTM squeeze. That is perfectly applicable here. So let's look and see how the TTM squeeze fits in for this projection. And then we'll talk about letting this run as a long trade. And then we'll talk about the short end side of this too. So the TTM is going to work identical, okay? It's just going to show you information in a different light. So the TTM squeeze here, for those of you that are getting this TTM for free from the webinars, all it is, it's just an oscillator that's going to give you a signal light when it changes colors, and it's going to tell you, hey, maybe momentum is starting to shift as we're trading into this zone, okay? So right now, this is an ambiguous zone because the snow line is not there. The snow line is just that white line. I'm going to take this trade right here, exactly here, because I'm getting that signal. Now, how do I know if I'm going to let this run or not? That's the entire purpose of today's webinar, and that's a fantastic question. So check this out. This is the thing here. This is the sauce. I wouldn't say secret sauce, but this is the sauce. I already have two levels that I'm watching. So in my mind's eye, I've already planned this trade out. If I'm taking this entry on this signal for a long position, some of you might be thinking, hey, Sage, right now, I know you said that the snow line was there, but I don't see it there, buddy. So what are we doing right now? In a live scenario, I wouldn't have taken this trade if that snow line wasn't there. But since I did for today, I rode this all the way up to right here, and then I chickened out. So when I took this trade, there's the buy signal. But what am I going to do with my stop loss? What I'm going to do with my stop loss is I'm going to set it just there below. Okay. That's going to be my first trade. Nothing magical there. There's nothing magical about this. But when it is that I'm looking for a higher quality setup, it's going to be backed up by how strong the momentum or how strong the indication is here on a pivot of that momentum. This is crucial. So on that pivot of momentum, whether you're using the TTM or whether you're using the RAF indicator, that for me is going to denote maybe this trade is worth my while or not. Okay. So if I'm taking, or if, let's say I wanted to be in a scalp position, and let's say I wanted to take the scalp here because I'm biting my tongue because I didn't take it when Sage initially took it. Would I take this trade right here? Probably not. Why? Because my oscillator is not firing. This is called a squeeze methodology. This is not anything new, but it is something that works quite well because you're squeezing on what's called momentum. So we've only talked about two conditions so far. We have our support, we have our resistance, and then we also have where we are on our oscillator. I don't want to lose anyone. I'm going to give you the third condition here in just a second. So when I'm looking to let this winner run, this is just proper trading etiquette. I know a lot of you already do this, but you really need to have this down pat. I did this today. I was prepared to lose a little bit on the position. I paid $220 for it. I was prepared to lose about 20 bucks on it. So roughly about a 12% loss. I was already prepared for a new entry on the position if we had a criteria entering all the way down here. But when would I look to enter the position again, right? I want to make sure that this is really, really clear. When my oscillator or when my pendulum is telling me, hey, on the 1 minute or the 5 minute time frame, doesn't matter what time frame you're using. If you're on the 1 minute time frame, you need to go based off of what that indicator is telling you for that time frame. If you're on the 5 minute time frame, sometimes you don't get such a clear signal. Sometimes the signal is going to be different. But if you're a scalper, if you're here to let your winners run, you're normally going to be on that 1 minute time frame. So would I have taken this just off of the 5 minute time frame alone? Some of you are thinking, hey, Sage, I don't see it very strong there on your oscillator. You're absolutely right. There's no question how right you are. So on the 5 minute time frame, I'm going to look for different conditions. But if you're a scalper, which all of you are, I would hope that's why you're here. If you are a scalper, you're going to jump in the 1 minute time frame and you want to try to snipe these positions as best as you possibly can. And this is the information that I'm going to look for that condition on a long. Okay. Now, what is the third criteria? I talk about this on pretty much every webinar that I ever go through, and I talk about this during power hour sessions too. You want to look at price action engulfing. What the heck does engulfing mean? Engulfing means that you have a change or a pivot in direction of where the previous candle was heading towards. So here on the 1 minute time frame, you have very, very clear and very jittery information. The information was very clear that we were looking to maybe trade down into this area at about 445.75. This is where, historically speaking, I would have said, Q's is consolidating here. This is the consolidating box. This might be a liquidity sweep just a little bit lower, so on and so forth. I'm trying to refrain to use that terminology as much now that I have the voodoo lines. But if I didn't win on this trade, let's just say I was triggered at a 10% loss, I don't have to bite the bullet so hard on it because I already have an additional entry criteria as we're getting closer to a snow line, not snow line, a skyline. So you see how this works? I'm okay with taking a 10% loss here because I know that I'm going to get another opportunity if we trade a little bit lower. If I'm starting to get that buy signal that's pretty clear on the 1 minute time frame, by all means, I'm looking to take that pivot once again. All right. Now let's actually talk about target levels, right? We talked about the entry criteria. I try to be as definitive as I possibly could here. We'll talk about shorts. I can't give you too many examples of shorts because nothing fell today, but this is a really, really good example of using three-step criteria. The voodoo lines, the oscillator, doesn't matter if you're using the RAF or the TTM. I like the TTM because it's a little bit more real time. Us old farts, we used to use the RSI and the MACD, but these are a little bit more real time, so you can engage with the market a little bit better. And some of you guys are using the VWAP and the EMA stacks. That's fine to do as well. That's perfectly fine. All right, so in this situation, how do I know that I want to let this winner run? This is the thing, guys. If you want to look to let this winner run, all you have to do is you have to employ the right metrics. The right metrics are going to be you have to have good etiquette as a trader. So I put this here. I set the stop loss at about a $20 loss, right? Because in my head, I'm setting the stop loss already when I put on the trade. Because if you're doing that 5 minutes after the trade, you need to step back. You're not trading correctly. I don't care how good of a trader you are. You need to trade with a stop loss. So you're going to put that stop loss there. And if you get stopped out on a $20 trade, your entry was no good. And you have to be comfortable with that. So how do I know that I'm going to let this trade run? The oscillator is going to tell you. And the oscillator is going to give you some direction on where it is you're losing momentum. And then the voodoo lines are going to tell you where you could potentially start seeing resistance or support. So we traded into this fire line. Tell me we did not reject that fire line right there. We absolutely did. So as I was looking at, I got pulled out a little bit earlier on this trade because this candle, it spooked me out. It spooked me out because that signal, in my opinion, at the time, I said, I think we're losing momentum here. So when I'm looking to let my winners run, if you're doing 0-1 DT, that's it. That's literally it. If you're starting to move, all you need to do to guarantee the trade, literally, you have to move the stop loss now to break even. That's all you have to do. So as your start, you can use also, I'm sorry, you can move the stop loss up mechanically, or you can do a trailing stop. That's what I was going to say. Both methods are going to be perfectly fine. Now, the way that you want to guarantee the trade is if you got the appropriate entry, then you can ride the trade for as high as you need to per where your momentum indicator is telling you, hey, we probably want to get off the bus at this point in time. If you are a little bit more risk adverse, like I am for the shorter time frame trades, at the first sign of weakness, you're looking to take off the position. But did I need to do that here? No, I didn't. If I set my stop loss at break even, I had all this room. I had a $50 room. This trade ended up being 150%. I took it off for like 35%. But anyway, that's just reminiscing here. When I'm looking to hold on to this position, I had all this room, guys. I literally had all this room to hold on to it. So there was no reason. There was no price action that was breaking structure. There was no candle that was knifing into my initial entry position. So all I had to do was just keep on moving up my stop loss. Now, the way that you want to move up your stop loss, every trader will tell you different. But for me, I like to move it up in about 10 to $20 increments. I want to give it a little bit of breathing room. Okay. So if we do pull back, there's always a possibility that we hold right here. And then finally the trade starts going. That's exactly what happened today. But I'm using the voodoo lines as my criteria for an entry. I'm looking at my indicator. You guys don't have access to the RAF, so I'll actually use the TTM here for the example. So, and you guys will get the TTM here for free. Don't pay for the TTM Squeeze Pro. We don't want you to pay. It's a very expensive indicator. So what you're looking at is you're just looking for a loss in momentum. If I'm using just the TTM, that would have been right around here. So tell me that's not exactly lining up with price action. That's a game plan right there. So if you're looking to hold on to your winners, in this situation, you could have done you could have done three things. You could have scaled out of your position if you took 5 contracts. I'm normally there. I take about 3 to 5 contracts at any given time. You could scale out your positions and you can guarantee a win on the trade. You can let the trade just do what it does and just move up the stop loss so you can guarantee a win on the position. You can do that as well. Or you can do the third thing, which is what I did. You can just clear house, right? I ended up making on this trade, I made about $350 on the scalp. I was good with that. So that's how you're going to let your traders win overall. You're going to let the momentum dictate exactly what your entry criteria is and where potentially your exit criteria is. So one thing that I don't like about the TTM indicator and the RAF as well, remember I said indicators are not going to be the end all be all. They're not perfect. They're literally not perfect. Sage, how do I know that I could have rode this all day long? This is where you, the trader, are going to be the person that decides this, because the indicator here failed us, didn't it? If I'm looking to hold this position, if I took a good enough entry and I'm well beyond where my entry was and I'm well beyond where my stop loss is, you just leave it and you just incrementally start moving up your stop loss. So you need to babysit it. You need to set your trailing stop and just need to hold on to the position. If I would have done that, I would have held all the way up to whatever it went to today. I would have been all over on the position. I bought it for $220. It ended up going for like $6 today. So that would have been great. That would have been great. It doesn't really fit my personality. I don't like to sit in front of the computer for 8 hours a day, babysitting a trade. But in this situation, I would have cleaned house. I would have, on a whatever it was, $400 investment, $500 investment, I would have tripled it, right? So what I'm telling you is you want to use the indicator, but you also want to use some self-sense. If you are not breaking the structure lower, why would you take it off? There's no reason to take it off. So that is where an algorithm, that's where an indicator, that's where nothing is really going to tell you that. The indicator told me very, very clearly to take it off, but price action did not, right? So remember, price action was my third criteria. We're using the voodoo lines, we're using the oscillator, and then we're using price action. So it's up to your discretion, here. All of you unanimously should be telling me telepathically, I'm not going to cut it here, Sage. Why? Because my entry was right here. Why would I cut my position if we're so far away from my entry? We're just going to let it ride. So my first target area here on my snow line, let's just say I hypothetically say that another snow line was right here. That's going to be my first target area. If I beat that and I'm running into that with strength, there's no reason to take it off. You see what I'm saying, guys? There's absolutely no reason to take it off. And this is how you allow a winner to run in your direction. Now, let's just say hypothetically this started to curl against you and then it's starting to run for your entry criteria. Guess what? Your stop loss is your safeguard. It's your safety net. And if you're moving it up like you should give it some breathing room. You want to move it up in 10, maybe 15, $20 increments. You're just going to move it up, move it up, move it up. And what you want to do, your primary focus as a professional trader, and that's what we want to try to strive for. As a professional trader, your only concern is preserving capital. That is literally your only job. You want to try to preserve as much capital as you can whenever you're putting on risk. And that's what you're doing with this practice right here. So if we did start to curl, maybe I would have given up a little bit of my profit at that point, right? Some of us are skittish. I'm a skittish trader. If you started giving up some of your profit, then by all means, at least you guaranteed somewhat of either a break-even trade or a little bit of profit. And this is how you do it, guys. You want to try to set that trailing stop loss, and you want to periodically, I say periodically, but really what I mean is every couple of seconds, you just want to move that stop loss up incrementally. And we do that practice here at High Strike. We definitely do that. So I chickened out based on the information I was getting. I got a bad call here, literally a bad call. But watch list was all over longs all day long. I saw the selling pressure. I was paying attention to just market sentiment overall. Volatility index was pulling back. This has more to do with my experience, but I knew that I wanted to be long going into today. So this is a very, very clear and very condensed example of just looking at one particular trade. But I want you to think in the grand context of all the trades that you guys take. Don't just think, he just went over Qs, so I'm going to use this only for Qs. Nope, you shouldn't be thinking like that at all. You're going to take any stock. It doesn't matter which one it is. You're going to take your AMD, your NVIDIA, whatever. We'll do NVIDIA because NVIDIA today slapped. NVIDIA was great. Let's do it on the 5 minute because I don't think we have any snow or we don't have any snow lines or anything like that on NVIDIA for the shorter time frames. Okay, so let's check out NVIDIA. NVIDIA pulled back very close to a snow line down to 916. I believe we can see that on the 1 minute time frame. So we pulled back right here, and then we started getting an oscillation here to the upside. Now, would I have taken this signal right here? Probably not. I like to focus on my snow lines, my fire lines, and my tree lines, where I would probably look to have taken a signal. Remember, first criteria is going to be support and resistance levels. Remember that, guys, from the slides. And the second criteria is going to be where is my oscillators. If my oscillator is giving me a very clear sign that the momentum is too dragged down to the downside or too partial to the upside, I'm going to be paying attention to those overall momentum oscillations. So maybe not taking it out the gate. I don't like doing that as a trader. Some of you might. That's okay. I'm not a breakout trader in that sense. Going to give it a little bit of time for it to form an opinion. And then after the sell-off right here, what did the TTM tell me? The TTM on the 1 minute time frame is very clear, guys. It's very, very clear. We started flipping the momentum right around this candle right here. That would have been my entry criteria. So that's hitting point number 3 and also point number 4. We talked about price action and also engulfing candles sort of interchangeably. We got those two conditions right there. So we had a strong pivot of direction. We got a squeeze there on the TTM. We were close enough to the snow line. It's not going to hit it perfectly, but we were close enough where here I would have warranted a long position. And I did. I did call out a long. I called out NVIDIA 940 3 weeks ago. So we hit 950. We're hitting it now, but that's beside the point. Here would have been my entry criteria. Why would it have been my entry criteria? Let's go through the steps again. It has the candle. It has the change of direction. We have close enough to the snow line. I mean, it's $3 away. It's never going to be perfect, but it's just where I want to pay attention to some of these levels. And then I'm squeezing. If I'm squeezing on the 1 minute or 5 minute time frame, it's going to grab my attention. You guys will get this indicator after this presentation. Don't even worry about it. Do not pay for this indicator. But anyway, here is where I'm going to take that entry. And where am I going to set my stop loss? I'm going to set it right here where I'm giving it just a little bit of breathing room. So what would have happened in this situation on NVIDIA? I would just very periodically start moving up the overall stop loss. So if we don't have a break of structure, you have yourself a nice bulldozing trade, and you just have to ride out the trade. You have to babysit it. There's no way that you can't babysit it. I'm sorry. That doesn't exist in trading. You have to babysit the trade, but so long as you're not pulling back into where your initial entry was, you would have ridden a really nice trade. And check this out, everyone. Some of you are like, I'm not really believing this voodoo line crap. Well, the voodoo line rejected right there at the snow line, and it hung out there pretty much, well, what is that, all day? Yeah, man. That's some pretty clear distinction on where we can have a magnetized level. That's what they act as. They're not in the truest sense of support or resistance levels. They're just where we can react off of. So here, I would have looked at my indicators and I would say, hey, am I getting a strong indication to short NVIDIA, so on and so forth? Then from there, you're starting to build that opinion. Okay. Do not come into the market and saying, I'm going to short the crap out of NVIDIA or I'm going to go long the crap out of NVIDIA here today. We do that on the larger time frames. Don't do that on the shorter time frames. Shorter time frames, your only focus is interpreting the data, and from there, literally engineering the trade exactly how I showed you. So if you would have done exactly what it is I showed you here on NVIDIA, you would have written this trade. We'll do one more here on AMD. Damn, we went through, damn, we flew. We absolutely flew. I don't know about you guys, but time flew for me. All right, let's talk about some of the criteria here on AMD. I'm going to revert back to the RAF just so it's a little bit cleaner. I think the RAF is a little cleaner. You have access to the RAF indicator if you guys trade with us. Ready, aim, fire, pro. All right, cool. Okay, so what are we getting? Out the gate, we already got a jump, right? We have a skyline level here. The skyline level is the weakest of all levels. I don't even pay attention to it. So this is just a very low level, magnetized level, but we're going to see where the indicators are starting to give us some information. I will tell you right now, even before I say anything, I would have not gotten a very strong signal to take this long on AMD, and you guys are going to already understand why. I'm looking at AMD and I'm partial to maybe a 5% bias on this. So I waited just like I did on my watch list that I showed you guys. I was waiting, see if we're going to trade down into one of these snow lines, right? Coincidentally enough, we hit a snow line here pre-mark and then we started jumping. This was all because of CPI, so it doesn't really count. So we're into a skyline level here, which is the sky blue line. And now I just want to pay attention. If you're a scalper, you want as much information as possible. So I'm paying attention here on the 1 minute. Do we have a strong signal to take this long here? We don't. We don't. I want the strongest signal possible. So remember when I talked about quality of trades? This is going to be, in my opinion, a B level trade or classified as a B trade. Why is it a B trade? Well, it's not trading strongly enough into one of my pockets, support or resistance levels, and I'm not getting a strong enough signal. A strong signal is going to be something like this, where a strong signal is going to be where I'm overextended past these levels right here on the oscillator, where it's telling me very clearly, hey, this is maybe where I want to pay attention. Now I'm going to give you an example of where you got a weak signal and you would have ate crap on this position. A weak signal would have been right here. Now, would I have taken this position here just from my own merit? Maybe I would. Maybe I would have. I have a strong enough signal. I was close here to a skyline, but what would I have done? If I took this signal long, I would have set my stop loss right here and I would have been stopped out very close to maybe this candle or this candle. So I'm not incurring too much risk. You guys see how it is that we're starting to build these plans. So now let's refer back to earlier in the day. Did I have a strong signal to take a long on AMD per se? We can make the argument I personally would not have. This wouldn't have been strong enough. I know that I have a strong signal when I'm, remember, criteria number one, close to a voodoo line. And from the voodoo line, then I'm saying, okay, guys, pay attention. Pay attention because we might start seeing an engulfing candle out of this level. And if we get that buy signal, then maybe we want to act on it. Some of you are thinking, hey, I can use this with VWAP or I can use this with my 9 and 13 EMAs. You're thinking exactly correctly. So you're going to pile that on here. And then if the signal is strong enough, I will act on it. If not, then I would rather wash my hands on it because I only have 3 trades that I want to put myself through. Because being in a trade that you don't have control over or you're not confident in is hell. It's literally the worst thing. So if you don't feel in control or you're not looking for that low-hanging fruit trade, don't even consider it. So AMD is a really good example of here. I would probably bite the bullet here and say, I don't think I want to take this position. Last thing I'll do is SPY, and then I promise you guys I will wrap up. I'm so sorry, but I'm enjoying so much showing you guys this because this is how you're going to see what I made today. You guys are going to see why, why I spend so much time in trying to really get into the fine nitty-gritty details, because if you do this correctly, you can make so much money. So much money. Okay, let's check this out. We traded down into a skyline level. Look at look at here where we got a signal, right? So we talked about that QQQ signal. This isn't lining up. These were, it feels like they changed in the last hour or 2 hours, but whatever. The signal here is pretty clear. So I like the snow line levels. I'm partial to snow, tree, and fire line. Forget fire lines, man. Fire. If I'm looking at something close to a fire line, then I'm really starting to get pretty excited on the position. But we don't have those examples today. So we pulled back, just like I said here for my watch list. I literally said, look, wait for a pullback. All-time high. Watch the snow line level here at 424.75. We're on SPY. Where did this pull back to? Let me see exactly if I hit that exactly. So we hit. No, we didn't hit. So the snow line was right here, 425.75 at the time. So we pulled back here into the skyline level, and I'm already paying attention. But what is that second criteria that I told you guys to look for? Wait for the oscillator. The oscillator is telling me, hey, Sage, ding dong, man, pay attention. What was the third condition that I said? Price action and also engulfing candle. Did we not get that here? We got that here. We definitely got that here. So I'm not going to take the first candle, right? Because this is the 1 minute time frame. You want to give it a little bit of room to breathe. Get about a minute, 2 minutes, right? From here, when we're starting to move in the opposing direction, and by God, if there's some volume on that, then I like it even more. That's like the sixth criteria there. I didn't even want to talk about that because it's already overload of information. But when I'm looking at that pivot, dude, I was looking to take the position right around here, and then I'm just riding the wave. So where am I going to set my stop loss? I'm going to set it just below where I took my entry. And I don't have too high of a risk on the position because I already have that safety net. So what am I doing? The same thing that I said there on the cues. I'm just going to move that bad boy up, dude. And if it's not curling into my stop loss, you don't have too much work to do. You really truly don't. You don't have to worry so much, and you don't have to stress about the trade. You would have had or held on to a home run trade in this scenario, right? If you do start to break lower, that's fine too, man. You can take the 10% loss, and then you can look for another entry criteria when you're setting up your conditions. Of course, I'm focusing on longs today, and I apologize for that, guys. When we're in short bias markets and when we're in high volatility, it's just going to be the exact opposite. So it's not too hard to figure out. But in this scenario, dude, all you have to do is just move that nugget up. It's literally about moving it up and just you being very careful not to, like not kill it, not move your stop loss where it's just 1%. You don't want to do that. You want to give the trade some room to breathe at least, for God's sakes. But in this situation, if you did exactly the steps that I talked to you about, you would have been a very, very successful and very happy trader today. A lot of people made money, not just on my signals, Kyle's signals, and whoever took long. You did really, really well. Now you're thinking, Sage, what if it does curl lower? Then your entry was no good. And that's why we want to be picky with our three trades. If your entry was no good, don't beat yourself up about it. You put on a relatively small amount of risk and just forget about it. If you can't win on three trades for that day and you took 10% loss on all those three trades, don't worry about it. There's going to be plenty of other trades and there's going to be plenty of other setups. Okay. But this is realistically what it is that you need to look for on the shorter time frames. When you're talking about larger time frames, that's another webinar. And I need at least 18 hours to talk about that. But if you sit for that webinar, holy crap, you will come out a machine, literally a machine. Um, we've been killing it with our long positions. Forget about it because we hit all these conditions. The same thing that I'm talking to you guys here about on the shorter time frames. You just want to plot it on the 4-hour daily time frame. Done deal. Done deal. Okay. So I'm going to wrap up. Hopefully, I was able to convey a clear message on what it is that we look for. I just want to reach a conclusion here. Watch your support and resistance levels. We are cheating a little bit using our voodoo lines. All they're going to tell you guys, for you guys to get some context, they're just going to give you a map of where you can find support and resistance. That's all it is. Okay. And we like them. We like them quite a bit. And I talk about them with such enthusiasm because they're making me money. And if I'm making money, our traders are making money. And our traders have been making money. There's no question about it. So that's why I'm so enthusiastic talking to you guys about this information. Next thing is going to be an oscillator. If you have a real-time oscillator, it doesn't matter what it is. I'm not using the MACD or the RSI as much as I used to. If you're using your TTM, if you're using some sort of real-time oscillator, if you're using something from LuxAlgo or whatever other retailer that you have out there, just make sure it's as close to real-time as humanly possible, okay? The ones that I like are the REF and the TTM. The TTM you will get for free right now. All you got to do, type in TTM Squeeze Pro. Enough of you have been here already where you already know the buzz. It's by Beardy Fred. Boom. Just put it on your chart. There you go, $700. So that's the indicator right there. Um, so you're going to use some sort of oscillator, and then from there, you're looking at a pivot with engulfing. The more engulfing you have off of a specific level, hopefully closer to some of your voodoo line levels, the stronger that pivot is, and the stronger you see that indication on your oscillator, that's where you're looking at maybe that B plus, A minus, A quality setup trade. Okay. And then from there, you're literally engineering the trade to be a successful trade, so long as you're setting your stop. Don't set your stop loss down here. Don't do that. Do not do that, because then you miss the entire purpose of today's webinar. You don't want to give it too much room. You want to be maybe around that 10 to 15% mark. If you're really risk adverse, try not to do below 5%, because then you're going to be stopped out way too quickly. If you want to go between 8 to 12%, I think that that's an acceptable loss. Okay. And those are relatively simple for you to make back, but give it just a little bit of breathing room. If you are stopped out on the trade, you have some work to do on your entries. And my entries are not perfect either. Don't think that I'm hitting 95% of my entries. It's not happening. But I feel more in control when I can engineer the trade and I know what the criterias are. And I already know if this goes sideways, this is what I'm going to do about it. Okay. That is the power of trading. And that's how you become a multi-millionaire trader. Literally. I just literally showed you how it's done. And I have no reservations about the wordings that I just used. If you do this at the capacity that I just showed you, you can have some days. I mean, today was great for me, man. These are just some of our profits. This was someone, I think she's here in this webinar here. I'm very, very excited for this individual. We sometimes share DMs, very, very clever individual. This was my day. These are not scalping positions, so don't think that I made this on scalps. No, I made this on the same strategy that I just showed you, doing it on the larger time frames. Exactly the same thing. So this is the position that I took this morning. I don't know if he's on this webinar. This was great. This is another trader here. This guy gets it. This guy literally gets the strategy. He's been with me for 2.5 years. This guy, I don't even need to coach him anymore. He's literally a copy of me, if not better. And this is not normal days for him. His normal day is between $1,000 to $1,500. This is another person here. Very, very well, very well. Very well positioned individual that is very, very concerned with risk as opposed to making as much money as possible. That is how I interpret this person's personality. And these are just some other traders that we have here for scalps. I mean, they're there, guys. They're there. Don't even get me started on Roy. Roy is an absolute rock star. Rock star. Roy is using the exact same strategy that I'm showing you. He's a guy that invested in the voodoo lines. He invested in his business. This is not a normal day for Roy. He doesn't like when we say that about him. A normal day for Roy is about $1,000 to $3,000. That is a pretty typical day for him. So $9,000 day is good. It is pretty. He started with us at about $100,000. I think he's 4 or 5x that by now, maybe even more. Maybe I have to ask him. He doesn't even ask me because to him, I'm a dinosaur to him. But he's using all this criteria that we talked about, man. It's all here, guys. It's all here. It's literally all here. So if you had, this is another day. This was great. This is when I called out 520 on SPY. So it's there, guys. The opportunity is there, right? Everything that we went over, even though it might not be rocket science. You don't have to be a nuclear physicist in order for you to be successful with trading. You don't have to buy the Bloomberg terminal, in order for you to have information first, for you to make money in the market. You don't need that. All you need is a really rock solid strategy that you implement over and over. And you need to understand the strategy, and you need to be so confident in what it is that you're doing, because when things go wrong, I'm going to do X, Y, and Z. Hopefully in this hour and 10 minutes that I've spent with you guys, I've been able to convey that. That is really my primary concern. Okay. So I'm going to go back here and we're going to wrap up. Let me go and just wrap up for today's presentation. And I'm going to hang out with you guys. Just a couple of things. If you do join our Discord group, we're going to offer you 1 week free with us. And you just want to be careful. You don't want to fall in love. I mean, if you do fall in love with trading, that's great. But you want to be careful that you fall in love so much with trading that this is all you're going to want to do. So just be careful with that. Know that going in. All right. So you have the opportunity to join Signals, and you're going to get 1 week free. You're going to listen not only to myself, but the other two traders that we have on. Nick was going through his winning streak. He's still going through his winning streak, and I've been on my winning streak for the last 4 weeks. I've been doing very well. These are some of my positions that I've taken recently. Um, I mean, these are just some of them. There's some other long positions that I've taken. I mean, today, PANW, I took a 70% win. Snow was great. I'm still holding on to a position on Snow. WDC was a rock solid trade. This was a rock solid trade, rock solid trade, rock solid trade. I've won a lot of trades on NVIDIA. I lost a position here on QCOM. QCOM is a rocket, dude. I don't know what I was thinking when I took that short. AMD was okay. I'm not too proud of this trade. I would have been proud of AMD today if I took it. That would have been great. NVIDIA long, we're going through a lot of these positions. So everything that it is that I showed you guys, for the love of God, guys, it's exactly how we do it. There's no thing that I try to hide from our traders, because that's not going to help anyone, right? If I'm doing well, our traders are doing well, and that's what we want. So these are just a couple of positions, right? And we still have quite a few winning positions on right now. Those are more selling positions. Those are not going to be scalps, because I use everything that I just showed you. I do it on the longer time frames. So you have live trading 3 times a day. I'm the afternoon guy. I'm the guy that tells you put on a $5,000 trade for the next 3 months so we can try to double that. I'm that guy. Now, if you're looking for a master scalper, that's going to be your 2 morning guys. They're even better at this than I am, right? Then you have daily market analysis. We're responsible for giving you as much information as we possibly can. We have our pre-market and post-market videos. Those are those are short videos that just give you the information as quickly as possible. And when I'm on live, I try to be as informative as I possibly can, because money is on the line. We have our high level indicators. The indicators that I showed you, those indicators are expensive. You get that with your package here at High Strike. So you're going to see those for the first week that all of you are going to join, because there's no question that this is something that you need to participate in, right? You all need to learn this stuff. You really, really do. You cannot afford not to learn this stuff. You have long-term insights on the things that we do. You have pre-market breakdowns. You have earnings analysis. Earnings analysis was great on one trade that I'm in right now. Cisco was great. Cisco was bomb. I'm happy about this. I'm about $3,000 up on this position, so that's great. And then also PANW. I've won 7 PANW trades in a row. I took this off before earnings because we were already at 70%. I don't need to hold on to it anymore. Great, man. All that stuff that we just talked about, all that, just ninjaing in and out of these trades like it was nothing. And Meta too. Meta was ridiculous. Get out of here, man. Meta I caught all the way down here. So check this out, guys. Y'all gonna love this, man. Y'all are gonna love this. What did I do on Meta when everyone was saying, nope, I don't want to be trading Meta right now? I went on the 2 hour time frame. And what did I do? Everything that I just showed you, everything that I just showed you. Got the buy signal, got the engulfing candle. What did we just do on that 1 minute and 5 minute time frame? Same thing. Same. Cool. That's it. That's it. That's the secret. That's really what it is, man. So you get all that for your free week. Just a couple questions I want to leave with you guys. This is just something that you need to consider. And I truly, truly do think that you guys need to consider this if you're maybe on the fence on whether you want to join a Discord group or not. How far are you on your own? I cannot tell you how invaluable it has been for me to learn from other traders that are doing things differently and think differently than me. If you're just surrounded with people that only think just one certain way, you're not going to be solving problems. You're not going to be privy to a different style and different opportunities. That's probably the first thing that you need to consider. Second thing, how much would it benefit you from just experiences with other people that are doing things that maybe you would have not thought about, learning just different strategies, and then really starting to hone in and really stealing our experiences, shortening that learning curve. It's invaluable as well. Is trading your hobby or is trading your business? Trading is my business. You guys just saw my business account. My business did very well today, extremely well. And then also, can you afford to continue trading the way that you are? If you are that person that's just losing money, day in, day out, you cannot afford to keep on doing that. You will not learn just by yourself, just by watching a couple of YouTube videos. Ain't gonna happen. We do the YouTube style stuff as well, but we give you the information that shortens the learning curve. And from shortening the learning curve, you're learning from experiences of people that are trading. Guys, we're trading. I'm trading a large account, and so is Kyle, and Nick is getting there as well. Kyle is over $1 million now. Kyle, when first started trading with us, Kyle made over $120,000 on one of my positions. Some of you know that story. He took it on SOXL. He did a Disney trade with me. He did a couple of other trades with me as well. He ended up, I have to ask him, maybe about $150,000 with my positions, with my signals. And then from there, now he's our lead trader. So I mean, that speaks just volumes for his work ethic and who he is. But it's just learning from other people. Now, guess what? I'm learning from Kyle. Kyle's the one that turned me on to some of the indicators that I showed you guys. So it has to be it has to be a give and take, and we have that so much here at High Strike. So Nate has given you the link there for you to sign up for a free week at High Strike. It is literally free. There's no strings attached. I will not be in your DMs telling you, hey, you need to be joining here for lifetime membership. I'm not going to do that. I don't have time to do that. Um, but you will learn some things here in just a week. If you take advantage of what we're giving you for the time frame, there is something that you'll walk away from. I can guarantee it. I can guarantee it. All right, I'm gonna start saying my goodbyes. If you all have any questions, just ask me. I'm gonna revert here to the comment section. If anyone is flipping me the bird, that's okay too. If you didn't find any of this information valuable, that's fine. It's a give and take, just like trading. But if you did find it valuable, just please let us know. Just give us a thumbs up and just say, hey, I learned something. And that for me is already, you guys have no idea how fulfilling that is. So if you guys can give us a thumbs up just to know that you got something out of this presentation, we would really appreciate it. We would really, really appreciate that. The Voodoo line is an indicator that you need to purchase. So they are an expensive indicator. It's not something that you can go on TV and you can just it's not it's a it's an indicator that's locked. I forget what it was. I paid a lot of money for mine, but I have to go back because now they're a little bit cheap. I got the lifetime membership for Voodoo lines because I saw the value. And the first week that I paid for the Voodoo line, the first week I already made double my money back. Um, and I'm a cheap guy, guys. I'm an extremely cheap human being. Like even the green screen that you guys are seeing behind me, I bought this used because I don't like spending money. But when I saw the value here, when I sat down and I went through a webinar, I literally went through a webinar. I went through two of them. I was sold. I was like, all right, I'll invest in this. And I did. I did it for my business. Are you in this as a hobby? If you are, that's cool, no problem. But if you're a business-minded person and you're saying, no, this is what I'm gonna do. I'm gonna spank ass here and I'm gonna kill it, man. I'm gonna be a killer in the market, and investing in your business is a good idea. At least I think so. CCI, I think you're asking me about a stock. Let me look at that. Do I like it? Yes, but yeah, check this out. This is gonna be cool. We don't have voodoo lines on CCI. It's only on indexes and things like that. CCI got your buy indicator right about here. I would have been in on CCI at about $97. It's just a little too overextended for me. It's getting sell signals, so I wouldn't take it long.